Hey everyone, welcome back to the channel. Today, we're diving deep into one of the most important tools every investor should understand, the quarterly report, also known as a 10Q. If you've ever looked at one of these and thought, I have no idea what I'm reading, don't worry. This video will walk you through everything you need to know, in plain, beginner-friendly language. By the end of this video, you'll know how to read a 10Q, what sections matter most, and how to use them to make smarter investing decisions. Let's jump in. So first, what is a quarterly report? A quarterly report is a financial update that public companies are legally required to file with the SEC, the Securities and Exchange Commission, every 3 months. It tells investors how the company is doing, what they earned, what they spent, what they own, what they owe, and how much cash they're working with. It typically includes 3 major financial statements: the income statement, the balance sheet, and the cash flow statement. It also has a section where management explains what happened that quarter and why. Each year has 4 quarters. The 10Q is filed after the first 3 quarters. The 4th quarter is usually included in the more detailed annual report, called the 10K. So if you're following a company and trying to understand how it's doing, the 10Q is where you look for the latest facts and figures. You can find quarterly reports on websites like sec.gov, through the EDGAR database, Yahoo Finance under the Financials tab, or on the Investor Relations page of the company's website. Just search for the company name plus Investor Relations and look for quarterly earnings or SEC filings. Now, a 10Q usually includes several parts. There's the cover page, the income statement, the balance sheet, the cash flow statement, footnotes to the financial statements, management's discussion and analysis, also called the MD&A, and legal disclosures and risk factors. Let's go through each one step by step. The income statement is where you see how much the company earned and spent during the quarter. Look for revenue or net sales, which is the total income from business activities. Then you'll see the cost of goods sold, or COGS, which is the cost of producing the products or services sold. Subtracting that from revenue gives you gross profit. Then there are operating expenses like salaries, rent, and marketing, which are the costs to run the business. After those are subtracted, you get operating income, which is the profit from the company's core operations. Finally, net income is the profit left after all expenses, interest, and taxes are paid. Earnings per share, or EPS, tells you how much profit the company earned for each share of stock. It's important to compare these numbers to the same quarter from the previous year to understand growth, especially if the business has seasonal changes. Also, compare EPS to analyst expectations, because that can influence the stock price. Next, the balance sheet is a snapshot of the company's financial position at the end of the quarter. It's divided into 3 sections: assets, liabilities, and shareholders' equity. Assets include cash, inventory, accounts receivable, and property. Liabilities are what the company owes, like debt, accounts payable, and taxes. Shareholders' equity is what remains after subtracting liabilities from assets. It's essentially the value left for shareholders. You want to see if the company has more assets than liabilities. Check how much cash they have on hand and whether their debt is increasing or decreasing. A useful number to look at is the current ratio, which is current assets divided by current liabilities. A ratio above 1 generally means the company can cover its short-term obligations. Then we have the cash flow statement. This section is often overlooked, but it's very important. Profit on paper doesn't always mean the company has cash in the bank. The cash flow statement is divided into 3 parts: cash from operating activities, investing activities, and financing activities. Cash from operating activities tells you if the company's core business is generating real cash. Investing activities include purchases or sales of equipment or acquisitions of other companies. Financing activities cover how the company raises money, like issuing stock or taking loans, and how it pays dividends or buys back shares. Ideally, a company should have positive cash flow from operations. If it's showing profits but negative operating cash flow, that's a warning sign. You want to see cash flowing into the business, not just accounting profits. Footnotes to the financial statements explain important details behind the numbers. They might talk about changes in accounting methods, pending lawsuits, or important contracts. These notes can be technical, but you shouldn't skip them. Sometimes the footnotes reveal risks or liabilities that don't show up in the main statements. The management discussion and analysis section, or MD&A, is where the company's leadership explains the quarter's results in their own words. They'll talk about what drove changes in revenue or costs, challenges they faced, and plans for the future. This section adds context that numbers alone can't provide. For example, if revenue dropped, management might explain it was due to supply chain delays or a product launch delay. It's also where they talk about risks, like new competitors or changes in regulations. Near the end of the report, you'll find legal disclosures and risk factors. This section details potential issues the company faces, like lawsuits, regulatory problems, or economic risks. Don't ignore this part because it can give you a heads up on problems before they become headlines. Now, how do you use all this information as an investor? Start by comparing the current quarter to past quarters, especially the same quarter last year, to see growth trends. Watch for consistency. Are revenues and profits growing steadily, or are they volatile? Read management's discussion to understand their strategy and outlook. Also compare reported earnings to analyst expectations, which you can find on finance websites. Keep in mind, numbers tell part of the story, but you have to read between the lines. Look for red flags like declining cash flow, increasing debt, or vague management commentary. Reading quarterly reports might seem daunting at first, but the more you practice, the easier it becomes. Start with companies you're familiar with and use this video as a guide. Focus on the key sections: income statement, balance sheet, cash flow statement, and management commentary. The more reports you read, the more confident you'll become in understanding a company's financial health. And confidence leads to smarter investing decisions. Thanks so much for watching. If you found this helpful, please hit the like button and subscribe for more investing tips. Let me know in the comments which company's quarterly report you want me to review next. I'll see you in the next video.